Big part of just speaking markets for a second, I mentioned to you guys at the end of last year that I made a bet on energy stocks. And the reason I made a bet on energy stocks is because some of the breakthroughs that we're seeing in decarbonization and renewable energy has driven a reduction in capital improvements across energy infrastructure. Because people are so optimistic about what's over the horizon, and they're so pessimistic about carbon-intensive energy systems, that we actually have underinvested over the past few years in energy infrastructure that it's turning out today is critically needed. So while this is a great long-term kind of optimistic world scenario, and it's going to decarbonize energy production and energy systems, in the near term, we're actually struggling a bit to meet our energy demands. And there's a lot of leverage that energy producers have over those that are the consumers, as we're seeing currently with the Russia, Ukraine, Europe crisis and so on. And so part of the reason for the climb in energy stocks over the last couple of weeks has been largely driven by the fact that we're realizing that this underinvestment in CapEx has created a decline in productivity of these assets relative to the demand. And so suddenly everyone's like, oh my gosh, these things are going to be able to charge more, commodity prices are going up, and so on. So, it's very hard to think about playing an investment cycle around this stuff because in the near term, there's still significant demand and we only have carbon intensive systems to produce energy.
Well, I was going to ask you, Chamath, does this mean on an investment thesis, you might see a massive spike in carbon-based fuel systems and these sovereign wealth funds and then a dramatic drop off?
No.
Okay. What do you predict will happen?
Nobody will support anybody investing in pulling more oil out of the ground. They'll support trying to get more from what we have. But I don't know if you guys saw, but there's no support for this. Whether you're an investor and you go activist on some of these oil companies, whether I think Biden had a big setback because he had cleared a whole millions of acres of offshore land for some kind of energy extraction that was then just reversed by the courts. No, but nobody has support for this stuff.
But but what you're saying is exactly right, and it's exactly the reason oil prices are climbing. I just sent you guys a link to what's going on today.
They're climbing for the wrong reason. So look, let's just be realistic here. We have a cartel. It's called OPEC. And what they do is they decide output, and we have some checks and balances to OPEC, namely Russia and a few other actors who will try to then regulate supply and demand so that there's mutually assured destruction. The net result of all of that right now is that we do have some constrained supply for the amount that we need to get back to the level of production we had pre-pandemic. So we are going to have some sustained energy prices. But you saw something really important this past week. Everybody was waiting for this big CPI print, right? The Consumer Price Index print. Everybody thought it was going to be a bad number. It was a pretty bad number, but the markets were pretty responsive to it. And then it's been pretty responsive the rest of the week, despite a whole bunch of stuff. I don't know if you guys saw it, but yesterday there was this crazy article where, one of the Fed governors was like, we should raise by 100 basis points by July. And, we should do eight raises. And the markets were like, what are you talking about? And why is that? Because now people have started to look, I've mentioned this before. When you go into a rate cycle, we're kind of past worrying about how many. We kind of look to the end and decide what we want to believe about the future. And one of the most interesting things is the rate of change of this inflation was actually lower month over month. And so if you think about it that way, we had a bad CPI print, but it's actually not going up as much. And in fact, it's starting to trail off. And a lot of economists now forecast basically this inflation peaking or already having peaked over the last few weeks. Consumer sentiment is not so good. A lot of us are now shifting our consumption away from goods to more services. We're stopping, the hoarding of the toilet papers of the world, if you will. And so I'm not a big buyer of this trade, to be honest with you, Freeberg. I think that it works in the short term. I don't think it's an investment. I think at some point you're going to have to make a decision about what your view on energy is.
I agree. I don't think this is a long-term trade.
It's a trade, not an investment.
That's right. But I do think that the macro sentiment sent the market in one direction. It creates it created a buying opportunity, which I was pretty clear about. And I do think that some of this global tension stuff we're seeing is only going to drive it up for a while.
I do think, however, that this big tech spread trade is moving from a trade to an investment, actually. And that I didn't expect. And the reason is I talked to a bunch of folks on Wall Street over this past week, and they told me two things. And one of them is a segue because I think we should talk about Microsoft, which is another brilliant move in the lexicon of business. But what they said was Facebook has become a funding short for other investments. Now, what does that mean? Everybody was crowded into big tech. We talked about this before, right? Those 5 stocks were broadly owned. They were effectively the index. But after that earnings report, a lot of investors, including retail investors, had to decide where to reallocate their capital and had to decide where to invest, where the money was going to come from to invest in these other names that were really beaten up. And what folks on Wall Street have been telling me is that, Facebook has become what's called a funding short, meaning there is no bid to buy that from institutional owners. They'd rather on the margin sell it to generate the cash to then take and invest in other things. And what you saw over this past week is the bottoming out of a lot of these growth stocks that were beaten up, right? They rallied pretty significantly every day, 3, 4, 5, 6% rallies. And other names in big tech have rallied really well, including Microsoft. And so I think that there is the potential, a small potential, that's going from a trade to an investment, actually, a sustainable trend that you can bank on for several years.
Investment, hold the stock for 5-10 years.
The trade, that spread trade, you can hold for a long period of time.
But for the winners the winners in that, just so people get refreshed, Google's a winner in that. Microsoft, Google. And then you feel Amazon, Facebook, obviously, and Netflix are the losers in that trade. Still feel that way?
I think that Microsoft and Google are far and away the winners.